The Barcode podcast is presented by Titanium CPG Insurance. Titanium protects forward-thinking consumer brands with a range of commercial insurance products and risk management services designed specifically for natural and organic food and beverage companies. You can learn more at titaniumcpg.com. Welcome to the Barcode podcast, where we equip emerging consumer brands. I'm Ben Ponder, and at Barcode, we're here to give our listeners the knowledge and tools you need to thrive in the marketplace. At Barcode, we think a lot about closing the gap of learning that comes from direct experience. Because one thing we see time and time again is this: a brand grows over time, gets sold for a ton of money, and then the founder who just sold it doesn't go sit on a beach somewhere. He or she turns around and starts building something new. And then that second company reaches success in a dramatically shorter period of time. The lessons that founder learned in the first rodeo dramatically impacts the trajectory and time horizon of future rodeos. Our guest, Sean O'Connor, managing partner at Big Swig Sparkling Water and Dynamo Specialty Distributing, has lived that story and has a ton to share on what it takes to create and launch a food or beverage brand. He has deep experience in food and beverage distribution combined with the unique perspective he gained when he started a rapidly scaling food company of his own back in 2005. Welcome to the Barcode podcast. I'm Ben Ponder. I'm really excited to have my friend Sean O'Connor with us today, who is, I think you'll find, one of the more interesting folks you're going to encounter in the food and beverage space, and has a lot of fascinating experiences, great stories, and a wide and both broad and deep set of experiences that I think first time or less experienced founders can definitely learn from. So, Sean, thank you for being here.
Thank you.
Before we dive into all of Sean's vast background with some of the different startups that he's been a part of and is a part of today, I wanted to just invite him, as we're tend to be focused on food and beverage stuff, to share with us your iconic meal from your past, whether childhood or even adulthood. Like, tell us about what that meal was and what it meant to you.
So, growing up, grandfather was in the restaurant business. Mother's from France, from Paris, France. So big food family. Father raised capital for a group of restaurants in LA, which is where I grew up. This place called the Mustache Cafe, across the street from the Improv. And if you remember, this is in the 70s. Spot. Well, yeah. This is party time, 5,000. This was crazy. But Fernot and Camille were the operating partners. We ate everything. So it was a French brasserie. It was oysters. It was escargot. It was, I'm 6, my brother's 4, and we're eating the house. So, all of that kind of.
Did you naturally, as a 6-year-old, did you enjoy oysters and escargot? Did you not know anything? Did you not know that there was a stigma there for a lot of other 6-year-olds?
We had no, it was delicious.
It's just great.
And we hammered it. So, all that kind of.
Bring on the caviar.
Yeah, rich food that people wouldn't have thought about. If they were eating it, and this is the 70s, right?
That's right.
There were mirrors all over the bathroom. You know what I mean?
Go.
They were getting after it.
That's right. That's right.
And I've raised my girls now to eat like that, right? I took them to Quality Seafood, and the waitress was like, honey, how old are you? She's like, I'm 8. She's like, I've never seen an 8-year-old.
Quality Seafood, if you're not in or from Austin, is the kind of go-to purveyor of fine seafood here, which, again, if you know your geography, we're fairly landlocked. So
Right, that's right. But it was her 3rd dozen, and she just doesn't know different. I'm like, those are expensive. She's like, Dad, I don't eat the Gulf. I'm like, oh, then it's really expensive.
That's awesome.
Right?
I don't eat the Gulf.
Yeah, that's right.
I got standards, Dad.
That's right.
That's amazing. Okay, so I want to back up a little bit. You've done a lot of things. You came from this food family. You find your way as a young man up in the San Francisco Bay Area. talk a little bit about like the early days. So you were involved in some of the initial launch of Red Bull in that metro area. What were you doing at the time, and what was that like?
So I was working. There was a beer wholesaler called Golden Brands, which was actually just recently purchased by the Reyes family.
Okay.
And it's now called Golden Brands again. But we were a Miller house and really the first craft beer house in the country. Craft beer was happening. This is mid 90s in San Francisco and just city and county. So, not a huge area.
Very localized.
Yeah, super local. And Red Bull launched. I mean, when we talk about Red Bull and you look at the category of energy that's grown, you meet anybody, they're going to say they work for Red Bull. And I say, like,
Sure.
hey, if I don't recognize them, they were after, right?
Right.
There were, there was one gal and three guys. I mean, that was Red Bull.
Because it was, so Red Bull is this Thai company, Austrian
Right.
Founder kind of mishmash thing. Where did it actually launch in the U.S.?
So we were city and county of San Francisco. I think there was a wholesaler in Santa Cruz that might have got a truck before us.
Okay.
They had said, my boss, who was a great guy, this guy Bob Stahl, had said no to them like 7 times. They had already pre-bought TV and radio and then started sending free trucks. So we were charged. I mean, if you can imagine the first meeting, they're like, we're an energy drink. And nobody before that.
That wasn't a thing.
You didn't need energy.
You have styrofoam coffee.
Yeah, all that stuff was really burned. Coffee's good now.
That's right.
It used to be just burned, which is, that's a trip. So they give us this entire pitch. They get ahead of it in terms of marketing. I mean, crazy marketing. But we're charged to go sell energy, and I'm key accounts, San Francisco downtown, clubs, bars, restaurants. And the customer, it was expensive. It was $32 a case. And at the time, that's what we sold Heineken for. And we were told, okay, go sell these people this energy. They love it. They need it. They got to have it. And nobody was buying.
Right.
And then we ended up, so we were giving away coolers. It was a buy one, get 4. I mean, it was crazy.
Complete giveaway.
Yeah, what it took to make that happen. And it took a while for the worm to turn. Like that wasn't, I want to say they spent, I believe the number was like 10 million on radio and TV just in San Francisco that first year.
City and county.
Yeah, just to get it.
Not all of Northern California.
No.
Just
not over the
city.
Golden Gate and not over the Bay Bridge. So just there. And it was, it was everywhere. It worked. And that's really where.
Had it already taken off in Europe at that point?
It must have been popular, but we weren't.
Somebody's paying for this.
Right.
Right.
And they were making the bet big enough to, I mean, even today, people don't have that kind of money to throw at growing a business, especially in a small.
Not from zero.
Right. Exactly.
So you're there. They're pumping all this radio, TV, and giveaway stuff
and events.
Yeah,
that's right. Their event marketing was very robust. I mean, all their own.
Did they have the Mini Coopers at that point?
No.
Okay.
I don't even know Mini Cooper existed.
They do their kind of special branded Mini Coopers with the cans on the back, and
they did have things where they tried to get people to make their own airplanes or something to fly.
Right.
And then they just jump off a pier and
the flute dog.
Because
the Red Bull flute dog.
That's right, the flute dog. That's right. So that's where, but those were go-go times, and they were going after the college set at that point and giving stuff away.
And
or had that happened yet?
The club thing was happening. San Francisco, interestingly enough, doesn't really have. I mean, I went to college there.
It's not what you would think of as a traditional college city
at all.
Yeah, right.
Or much youth.
Fair.
In general. So I think they were going. It was just the clubs, right? It was the nightclubs,
right?
And then that's what we had kind of the term stolen from New York, the bridge and tunnel crowd,
right?
Right, people that come in from the burbs to party in the city,
right?
And that really seeing. I mean, it was really kind of an exceptional opportunity to be part of like this big change when you take one step back. Because as a salesperson, you're like, what are we doing? Why are we doing this? I thought we were in the beer business, right? So, and I was very young, so I shouldn't have had all like old jaded, but
Right.
But seeing it work and seeing it come alive was pretty cool.
I bet. How did you know when to use the term you used, when the worm turned? How did you know it was working?
Well, when you get your second reorder and you get your third. I mean, we're like in my business now on the distribution side, you're so close to it.
Yeah.
I mean, you, and this is again why I love distribution. Because you're in the street, right? You see it.
That's
no
right.
one's in an office, that independent retailers, that C-store or that shelf at an H-E-B is blown, and you know it right then.
Right. And what was it? Was it because initially that product, even people felt a palpable sense of energy from it? Because it's not, most people would say objectively that Red Bull doesn't taste great.
Oh, that was crazy, because we're all drinking it at the first meeting and we're like, what does it even taste like?
Yeah.
What flavor is
What
this?
is this?
So selling it, I mean, there were all kinds of objections.
Of course.
Right? Is it good? I'm not sure. I've never had it. It tastes like some kind of gelatin something, but nobody knew what it was, right? And it's like, Jesus, how are we going to, I mean, it was pretty incredible. So the consumer behavior shift, which I got to experience in the on-premise, was I got a $32 case. People are selling, so mid-90s, some of the call vodka, had started to happen. Tequilas weren't really,
it wasn't
there
a thing
yet.
yet.
It was still Jose Cuervo. And people
So
were
this
maybe
is like
getting $7.
the Grey Goose era.
Right.
Okay.
And people were getting like $7 for those for a drink. But then we showed up and you're like, well, it's $1 and change a can. And they're like, so you want me to give that away? Because I'm fine with a splash of cranberry that doesn't cost me what that costs. And how many drinks do I get out of a particular can? And the cans were those small cans.
Right.
So, the fact that they gave enough of this product away and really earned the consumer pull gave the bars, and they didn't really understand what was happening.
How much did a Red Bull and vodka cost?
It ended up drinks got up to like $9, and then or $10 in the clubs, and so that behavior shift was so powerful because, and the bars don't know that this happened, but all of a sudden, if you're getting 3 drinks out of everybody, you moved from $21 to $30. Right? And you take dollars to the bank.
Right.
Right? That's what pays the bills.
Right.
So that shift was a real positive shift.
And they were all in on that.
Yeah. Yeah. And Red Bull was, timing's really, really important. The partnership, I mean, the market was apparently ready for it.
Right.
I mean, I don't know what would have happened 2 years earlier. And had they not done that, we wouldn't have seen Rockstar and Monster. And
not at all. Were they the first ones to use that can? The
slim?
The slim.
I mean, I don't want to say. I mean, I think so.
It's the first. It's my first association. It's super common now.
Yeah.
But it wasn't before Red Bull, really. Yeah. So I think that the form factor became iconic in and of itself.
That's right.
As well. That's
right. And that serving size. When we look at the market now, people are pulling away from some cans. Those aren't very cool anymore. Mm-hmm. The 12-ounce beer cans.
It's kind of jumped the shark.
Yeah, a little bit. And it's hard to convey value out of that. You just kind of feel like you're getting cheated. It's not enough. But that's also very regionalized. I mean, they could be really popular in some parts of the country. But here in Texas and Austin, feels like that time is come and gone.
Yeah, that makes sense. So any other key, like early formative insights or things that you took away from that time that perhaps informed your thinking about brands and distribution and things like that beyond that day?
Yeah, I mean, I think I learned the appreciation for distribution, about how powerful a distributor partner can be, because it's really about getting it done. I mean, who the hell else is going to do it?
Right.
It's them. I was witness to, so the wholesaler I worked for had Red Hook, if you remember that from like Washington. They sold to Anheuser-Busch. The guy that ran the wholesaler I worked for went and interviewed a bunch of breweries, and Sierra Nevada kind of won the bid. Like, can you commit to X number of trucks a day? And if you can, we're gonna flip all this
switch.
Red Hook business to you, but it's big. And it was, something like 750 tap handles, again, in San Francisco, flipped in a matter of weeks.
Right.
Which really put Sierra on the map.
Absolutely.
And that was very big and a big leg up for them. And it's funny to think it could have been Full Sail, right?
Wow.
Because they were at the table too. But the freight, they were a little further, right? Fulfilling. Sierra was a little bit more close to home out of Chico.
Right. So history turned on some of these subtle things.
Totally.
Yeah. That's super fascinating. And I think it again, probably for your typical consumer, maybe even for a lot of entrepreneurs, it's easy to discount the role of that distribution because you don't see it. It's hidden, right? It's behind the scenes. It's early morning. It's back stock room of these stores, but you can spend all the money that you want to on radio, TV, social, whatever you're investing in. And if you're not on the shelf and you're not replenished and in stock,
right,
it's not going to do that much good.
No, that's right. And not all distribution is the same. Not all products require the same level of distribution. But if you go broad line or you go warehouse and you don't do DSD, which is what we are, there really isn't that touch. You're kind of relying on the retailer to work really hard for you.
That's right. We're going to dig in deeper on the DSD, direct store distribution thing in a minute, but I want to bookmark that for a second and then transition to another chapter of your business and entrepreneurial journey, which is the Batter Blaster chapter. Mm-hmm. So tell us about what was Batter Blaster, how did you come up with it, and what did that journey look like for you? Because I know it was filled with ups and downs.
Yeah.
Big ups, big downs.
That's right. And it was the panic, euphoria roller coaster of an entrepreneur. So I guess coming out of that Red Bull thing was being part of and witnessing like it can happen, right? Like these guys took energy and then it's like, well, why not? They were capitalized enough to do it. So I had Batter Blaster was organic pancake and waffle batter in a whipped cream can. And I had a guy, I was in the bar business in San Francisco. And one of my buddies, a regular, had run a food manufacturing business. And he did a lot of like frozen stuff. And I had the idea, I said like, why,
why not?
Yeah. I mean, there is kind of, geez, can this thing work? And we charge it with air and it makes it fluffy. And when I'm making waffle batter, I am putting like 7-Up or club soda in it to make it more, can this thing work? So we talked about it and he's like, I think we can make it work. And it was pretty nuts. I mean, a lot of people were like, what are you doing? That's what you're doing?
But a lot of great ideas start off as pretty nuts.
Right. So a lot of when you're really out there as an entrepreneur, you got to keep your head down. And if you're dreaming big, I created a category. I had no intention of creating a category. I just didn't know. And so, which
could theoretically create a giant prize, but is really challenging because now you've got to convince buyers, consumers, everyone else to change, fundamentally change some behaviors.
Right. And I liken it to, everybody's trying to climb a mountain. Our mountain had a lot of clouds on it, and I had no idea how much further I had to go.
Yeah. Are you at the summit? Time. Do you have a long ways to go?
Yeah. And I had forever to go.
That's right.
We were able to lab test it. It was a friends and family funding. We had 86 or 89 different shareholders, which was a lot.
That's its own conversation because that like having a cap table that is that full. That probably took a long time to have all those conversations that you needed to have, but then also you kind of got 89 bosses, or at least people who were curious about everything.
That's right.
And so it's hard to focus on what you're doing if you've got that many people. Sometimes that's just the way it needs to go. But I'm sure it came with with good and bad.
So I'm trying to think back. So this was, I started in earnest about mid 2005. We made our first sale in like October, November 2007. So it was a long time getting it started. And we had to develop our own manufacturing facility, find a co-packing partner, and then raise enough money to put this facility in. And I remember, so the facility was in like Ventura County, California, Southern California, and I was in San Francisco. And I tried a couple times to take the cans on the plane with a cooler. And then I would try and check it because it was just inconvenient for me to drive all the time. And I would get a speeding ticket constantly.
6 hours at least.
Yeah. And boy, I had like
pressurized cans.
Well, and they wouldn't believe me what it was, right? They're like, it looks like bombs.
That's right.
As far as they're concerned. So I had a,
waffle bombs.
Yeah. I had LAPD there. I had the Homeland Security. I mean, the whole thing. We're out on the sidewalk. I'm like, I'm going to miss the flight. It's just waffle batter. I did convince LAPD. I said, dude, take it home. It's delicious. And a couple of the guys were like, yeah, we'll do it. But the airport was like, that needs to leave the property.
Oh, my goodness.
That was ridiculous. Because it was unlabeled, right? I mean, it wasn't.
Oh, yeah. They're just samples at this point.
Yeah.
So you really, they really looked like artillery shells.
Yeah,
probably.
kind of. Yeah.
Yeah.
But I squirted it like into a garbage can.
Right.
And then there's a half running away.
That's good stuff.
It was a lot of crazy. I mean, I liken that business was kind of an act of will, really, because if it didn't, and my theory was, I mean, if I don't have 150 outbound calls, no one's calling me.
Right.
I mean, 0 people
sure
even care. We were able to grow real fast, and there's a lot to that story.
So how did you so you struggle for 2 years? I assume you're still working in the bar scene and just again making ends meet,
right? And
then you figure out how to get this stuff manufactured. How do you take it to market? Like, how did it launch?
The first customer was the big Costco business.
Okay.
I remember walking, I had a broker. I mean, I knew none of the jargon of the grocery business at all. So that was like speaking a different language entirely. And then, you just don't know what you don't know. I remember walking in, older guy, broker gets the meeting. It's the LA Costco buyer. And this guy's like shaking nervous. I'm like, hey dude, before we go in here, have you tried this stuff? And he's like, well, no. And I'm like, God, dude, this is rad. Right? This is really cool.
There's nothing to be nervous about here.
You don't need to be nervous here. I said, so I'm going to go in there and make pancakes.
That's right.
That's about as crazy
as
this thing is.
That's going to alter this conversation.
Well, I didn't know how big Costco was. I've been to a Costco.
Sure.
But I just didn't care. I mean, I felt like I'm not a huge at-risk position here. This isn't a make it or break it moment.
Right.
I'm going to show somebody else the next day. And so we go, you're just in their break room. I got an electric griddle, making pancakes. Then people are coming in, and I'm like, check it out. You can draw shapes and whatever, right? And then all these plates go out. And what the broker didn't explain to me was a Costco process needs to get through buyer, another decision maker, and then like the head of a region or something. So a lot of people just coming in and out, and a guy had come back in and out who was the buyer. But with all the action, I wasn't even sure who we were talking to.
You're just making heart-shaped pancakes.
Yeah. Try not to burn them.
That's right.
I mean, that was,
don't screw it up.
If I did that, then we're good, because they'll blame you for burnt pancakes. And the guy said, well, if we do this, I'm not going to want to see this at Sam or at Sam's.
Right.
And I totally naively say, Sam who? And he's like, done. When can you deliver?
Because you were really saying Sam who?
Well, I didn't go to Sam's Club.
You didn't know it was a big deal. That's Walmart. That's flyover country to you.
Well, that's right.
As a Californian.
Well, I was in San Francisco. I don't even think we had a Walmart.
That's right. Yeah.
So, or a Sam's Club.
Right.
So
That's all it took.
I was honest.
That's right. So you launch in Costco in the Los Angeles region there, and what's the initial response?
It's really good when we demo. But really, so that's when it starts to set in, like, where should we really be in the store? We're refrigerated. So if I was next to, because you're on a pallet, and then we're selling a club pack. So I don't even know what it is, but I got to buy 3 of them. And then we had not set a retail price point at other retail.
Right.
So even though I'm getting 3 for $9.99, the consumer, like, good deal, bad deal? I don't know.
That's right.
Right. So, I mean, it was good for trial when we demoed.
Right.
We quickly find out how expensive doing demos are.
Correct. And there's certain retailers, Costco being one of them, where demos are expected. And that's just sort of how you play the game.
It's your marketing. So it's a net, for an operator to actually generate positive revenue on a brand side.
Right.
There's people that sell private label stuff and commodity stuff that can do fine there.
Kirkland Signature.
That's right.
Yeah.
Or XYZ branded coffee, as long as they bought their coffee, right? And they're making their spread.
Right.
But a branded product is kind of a little hard.
Correct. Unless it's at astronomical scale, which Costco is very capable of driving.
Yeah, but if your demos are $250 a store a day, and depending on how broad you are, and what your margins are, right? I mean, I guess if you're,
because Costco can be very aggressive with you to say, hey, we really want to see a significant. Now you didn't have a referent price out there on the market, but typically if there's a pre-existing price, they're going to want to see significant value in maybe 2 to 3 times the size of container or pack.
Right. That's right. And that was interesting. I don't think they oftentimes do that. I mean, there are unique items that you'll see there, but because nothing like this existed, I mean, it became one of those, it's a treasure hunt item for sure.
Sure.
Like, oh my gosh, I was in Costco today. Check this out. And at
Never
$10,
seen anything like it.
Yeah, at $10, let's do it. So, I mean, we did well, but as we grew distribution coast to coast, so in short order, maybe 18 months, we were in 15,000 doors of traditional grocery coast to coast. Then,
do you feel like you were in the right doors? Because all doors are not created equal, especially for newer products.
Yeah, that's true. I mean, looking back on it, knowing what I know now, I would have stayed regional, like really
for
regional.
Longer.
Yeah, and like built a sensation. We also had stuff, we have stuff today, like the internet. I had a BlackBerry back then. I mean, there was no
they were crackberries,
social anything. It was best you're emailing.
That's right.
So there wasn't all these other ways to get to the consumer that we have now. So you would have to build a groundswell. We had a couple of reasons. Getting national press was easier for our type of a story. So the need to be everywhere. I think I was on early Regis. Remember Regis?
Oh, sure.
Show?
Regis Philbin.
Yeah. So he's on and he's making waffles. I got nothing to do with it.
That's teed up for Regis.
He
loves that stuff.
And I think it was like, it went way over. I was 8 minutes, 10 minutes. I mean, it was a huge between commercial breaks segment and they're eating them but I'm not available to,
right. And that's
3/4 of that audience.
Exactly. Timing that's so important. You see people chasing after PR and news stories or big magazines or whatever the site is. And the question is like, you got to make sure that your operations are growing to meet the demand. If you're creating that demand through your even earned media, in that case, like if you're going to be on TV in New York City, can they get you in New York City?
Right.
That's pretty important.
Right. And that's why we grew
as quickly as you did.
Yeah. But then we had to support it. And ultimately we didn't have it. We had, the 2008 housing crisis and we had the whole, the
crash and all of that.
It was hard.
It was a bad time.
Yeah. And then to market in mass
venture
grocery,
capital really kind of seized up in that moment
completely.
Too. Yeah.
People were scared. People were buying bullets, if you remember.
That's right. Oh, I remember
bullets,
well.
Which was ridiculous. But it was like, well, all right.
Yeah.
People are scared.
So it blows up, and it became a sensation for a little while, right?
Yeah,
Like,
I mean, we sold really well. I had another big TV thing I was on that Sunday morning, CBS Sunday morning,
Right,
and that
right.
was a really big show.
Yeah.
And we had broad distribution for that. And I want to say, like, that Monday, we got $1 million in purchase orders just to refill the shelves of every Walmart and Safeway and Kroger and Publix and H-E-B, right?
Yeah.
But we really never got to, were the shelves even full? You know what I mean? It's sitting in a warehouse, then the store needs to pull. I mean, we were never able to take,
Well, it's hard to execute, even if you had a pretty significant team in 15,000 doors across the country. Man, that's a tall order.
Yeah.
Especially for an early stage company that you're just scrambling and trying to keep up with everything. You're probably like, can we fulfill this million unit
Oh, that's right.
PO, right?
You're trying to forecast on all your raw materials. And then, on the food side, that a lot of that commodity moves around.
Mm-hmm. Can you get the ingredients?
Right.
Yeah. Can you get your cans? All of those things.
Right. We needed that was something, the cans. So there was only a few can manufacturers, those tin cans.
Right.
It was Crown that like makes the same, and Ball that makes the beer cans now.
Right.
And a company called B-Way. And there was some kind of collusion where cans went from.
There are not many manufacturers of these things.
Yeah, they went and played golf, and they're like, let's jack this up. Let's just do it.
Sure.
And I'm the smallest customer any of them have.
Low man on the totem pole.
Right, but they're doing, I mean, it was the same, like, Pam or something that was going in these cans. And they hadn't taken a price, and it just so happened when we come into the business, they're going to take a price. And and I want to say my can price went up by like 50%. It was a huge hit.
Significant. And again, for the early stage founders who are listening, prices on these things somehow never go down. They only go up.
Yeah.
Right. That's just sort of the nature. That's the Newton's law of this sort of thing.
And then when we start Big Swig, the same thing happens.
Sure.
But I mean, it's uncanny. I mean, it's like
uncanny.
Yeah,
boom,
there you go.
Boom.
But it's I mean, it was like 3 months.
Right.
And then the price gets
That's right.
jacked
And then
up.
it messes your margins up and all the things.
Totally.
Yeah.
Oh, and you can't take the price. So you just rewrite your book and
Right.
well, we're not making what we thought we were
That's
making.
right. That's right. So back on the Batter Blaster side, it did open some doors for you, right? So you were again, you're getting all this press, you're getting a lot of attention and certainly some relationships with retailers. You also like the Grocery Manufacturers Association.
That's right. We won. Yeah. So we won it's called the GMAs, the Group Grocery Manufacturers Association. They give an award every year for innovation and creativity. And it's the C-suite of everybody's there, right? Nestle, Coke, Pepsi, ConAgra, Kraft, General Mills, everybody.
Right.
And the category is $3 billion and under, and then $3 billion and over.
Right.
And
so it's just you hanging with the country club.
It was crazy. It was totally crazy. I mean, we were doing like maybe I did 8 or 9 million that year. And then it was me.
You're like,
winning.
I guess we're under 3 billion. Yeah.
Yes, significantly under. And then it was the General Mills guy.
Yeah.
Right. And there were 1,000 people in the room when you accept your award. I forget what I said. I did get some laughs. I think I admitted to being significantly under. And that was it was interesting. So you got to be on the advisory board of the GMA, which was awesome, with the CEOs of, I think it was Georgia Can, McCormick, Multimeal. I mean, big guys running big business.
Absolutely.
Like $1 billion.
Some of whom ended up being really helpful mentors to you too, right?
Yep. John Lilly, he was the last CEO of Pillsbury when that got spun off into a bunch of people. It was great. He thought I was nuts constantly. He's like, what are you doing, man? Like,
but kind of got a kick out of it.
Well, yeah.
Like,
I said, what are you talking about? He's like, consumer behavior shift. He's like, I'm not doing that. I don't know why you're doing that. I think he had told me, he's like, Pringles ran a negative P&L for 17 years in a row. And I was like, I love Pringles. And he's like, nobody needed a new chip, Sean.
That's right.
Chips are fine. You don't need them in a tube. They don't need to stack. The world didn't need it.
They had to work hard. They had to spend a lot of money
Yeah.
to alter that consumer behavior, which again, the prize is very big to your point, like with the batter blaster, the prize is very big, but you got to have a lot of money in the bank to be able to survive
Right.
for 17 years
Oh, yeah.
until you're actually making money.
Yeah, but that's not paying back the 17
No,
years.
just
That's
on a year over year. Yeah.
So that piece of business in that portfolio. And then his other good example, which, I never thought of and you don't think of until you're in the business, was it took all detergent companies 20 years to transition from powder to liquid. And you think about the Tide and the Cheer, all
Gain
these,
and all those, yeah.
So their collective marketing, because they're competitors, but
Right.
just to move that category from powder to liquid, 20 years of marketing. I mean, how many billions of dollars is that?
Oh gosh.
Because
yeah.
clothes were clean 20 years ago.
What's the problem?
Well, they just figured
Yeah.
we can make a little bit more money doing this.
Right.
And
Eventually
now-
they make the change over to pods.
Yeah, they're doing the pods.
Yeah.
I don't use pods. I don't know why I don't. I just don't.
You're philosophically against pods.
Well, I don't know. I'm frugal in some areas. Some areas on food I'll spend whatever it takes.
That's right.
But clothes are clean. No one's
That's right.
complaining.
That's right. I know how to measure my own liquid
Oh, it's just a
detergent.
splash.
That's right. It's easy. Yeah. So things progress at Batter Blaster, and you got it was hard, right? So how did you know when we're not going to make it?
Well, so we needed to fund. I did a debt deal as a bridge to a next round of funding. So I did like a friends and family for $1.5 million, and then another add-on friends and family with some more sophisticated for another $4 million. And then we did this debt deal that put the debt people in first position. And it was like a local energy Texas thing. They
Right.
had no idea, but we were a fun, cool product. And they didn't really understand the business. It's like, well, if you foreclose, there's nothing.
That's right.
Right. And I said,
Yeah.
I still have, right. I mean, we were still selling.
We're a brand. There's not a lot of hard assets here.
Right.
Yeah.
But God, we were selling 250,000 cans a month. I mean, it was still selling, but I said, I need more marketing. You're just going to have to hold on. And this may be a conversation for a different time, but like when you do debt, all of the different strings attached to that debt and the use of funds and the requirements to have a capital account that's not touched to make debt feel better to foreclose on.
There are all kinds of strings attached.
Yeah. Why? I mean,
you effectively have to have the same amount of money somewhere else.
Yeah.
In order to use that amount of money to grow your business or
That's
to
right.
keep it up.
That's right.
And that can be, sometimes it doesn't make a ton of sense. Yeah.
Well, it's specifically for us because it was really marketing. Like I didn't need more distribution. I needed more velocity. Learned a lot about household penetration. Our household penetration was very, very low.
Well, in most startup brands, it is.
Right.
Nobody's
no
heard
one's
of you.
tried it. And until you get your penetration up to, and it depends on the category, but up into like we were under 1%
Right.
household penetration. So until you get to like 5%, you don't even know if you found your customer yet.
Right.
Right. Because I kind of felt the Batter Blaster customer was going to be late to the dance,
Absolutely.
but they would really dig it, but they're frantic early stage parents.
Right.
And they're just, they're lucky to get the diapers. Like, did I not
Right. Or
forget?
it's grandma making,
Right.
making pancakes for the grandkids on the weekend or something like
So
that.
yeah, for that thing to have really worked, we would have had to get to that 10, 12, 13% household penetration and then find our audience in
Right.
there.
Right.
So we needed to market. It's hard to do as a manufacturer when you really have one product. I had a couple different flavors, but that's still,
Right.
it's located in one part of the store.
And it's good to be laser focused on that level. It's like you can over skew and create a different set of problems, right?
Oh, totally.
Your diffuse focus.
Agreed. And then when we went to strategics, because I had a lot of those relationships, everybody loved it, but the business was too much of a distraction, right? So these guys are like, I'm driving $1 billion ship, and if I bring you on, nobody's going to not say it's cool, but you're so small, you're going to distract.
That's right.
Everybody's time growing your thing from whatever it was, 9 or 10. But even if you got to 60, I got $1 billion over here.
That's right. Yeah. If you're not north of some metric, then the elephant is just going to accidentally stomp you.
Yep.
And they know this, right?
Yeah.
So that's why they're not buying cute little brands. Like, you have to reach that escape velocity, get to some what feels like to you a substantial number, and then it's beginning to be a cute number to them. Right? Because these are like, oh, we have, dozens of $1 billion brands in our portfolio.
Yep.
And you're like, well, I'm not that yet. But you just wait.
Right.
So you're raising money, you're trying to get you're trying to extend the runway, and then what happened?
And then the lender foreclosed. So that was just pop goes the weasel.
That's the death knell.
We're gonna foreclose on you. And I'm like, you sure you want to do this? I also had to do a personal guarantee,
right?
Which is
you're
kind
like,
of
okay,
unenforceable, right?
Yeah.
I mean, everything I had was in that business.
That's right. Okay, come after me if you want to.
Yeah. So they did a lot of
Yeah.
threatening. It was not. I mean, that's the ugly.
Yeah.
And you're alone for that one.
You bet.
And as much as when you're the CEO, as much as you did everything you were supposed to do and thought you could do, it's your fault.
Mm-hmm.
And it sucks.
Yeah.
So
how did you handle it emotionally?
I did, like, there were two choices. It was like Jameson or I had done the Master Cleanse in the past.
Uh-huh.
And I was like, all right, I'm just going to do the Master Cleanse. People are like, dude, what are you doing? Your life just fell apart. Now you're not going to eat for 2 weeks? I was like, I think I got to do that. I don't know. Yeah. How much worse can it get?
That's right.
And I could drink later. But it that's kind of whatever.
That's how you walked through that moment.
Yeah.
Do you feel like it gave you some more clarity in that time?
Well, you're just kind of a little bit more calm.
Yeah. And
I don't know if you've done the Master Cleanse. You get to like day 5, 6, 7, you're tripping anyway, right? Because
you're detoxing.
You're so hungry.
That's right.
That's right. Well, and everything's coming out.
Yeah.
So,
yeah.
That was how we did it. I mean, it was a more extensive process than that.
Of course.
It's like when you have no money, that's when you need your bankruptcy attorney.
That's right.
And guess when he gets paid? Like immediately.
Absolutely.
Like for me to say another word, I need $25,000. I'm like, well, but I thought this is the whole, and he's like, you think this is charity? Oh man, 25.
That's right. 25K per conversation. That's right. Yeah. So what did you do after that?
So that was, I think that was August 2012. Went on vacation.
Okay.
Because I was asked when the last time I took a vacation was, and it was September 2012. We did the Disney cruise. That was kind of, I read a lot of books.
2 for 1, right? You get Disney and you get the cruise.
That's right.
Win-win. You're the cool dad.
Who wouldn't do that? So we did that. And then I was working on just a number of different ideas. Was asked to consult on a business, which is my now partner's old business. And he was in the bakery business and asked my opinion. And after coming out of, the bloodbath that I just had gone through, I was like, you want me to be really honest? And they're like, please. And I was like, okay, this is going to hurt. But I was really honest with him. And I said, you either chase this thing with millions and millions of more dollars, and I'm not sure. I said, here's where the landscape is. Here's where your category is and the frozen space. This is the level of slotting you're going to need to expect to do. Your marketing opportunities are pretty low.
Right.
It's all price. And
yeah.
so they they wrapped up that business and they said, "What are you looking to do?" And I said, "Well, I still want to be in the business of growing brands, but I think it's really important to have a very strong distribution business. And I see a lot of opportunity in distribution right now in where the craft beer scene was a really good early way to jump into it. It's going to be expensive. It's going to be hard, but owning these relationships are really what it's all about, so that when we're ready to get back into on the brand side of things, we're going to do it right and we're going to control the whole thing."
Right. Now, at that point, are you still in California or have you moved to
No, I'm here.
Texas?
I'm here. So I moved to Austin in 2009.
Okay. So you were pretty familiar with the Texas distributor landscape at that point.
Yeah, although I was in the food space, so we ran Batter Blaster out of here.
Right.
And I was with a couple DSDs who were, when you look back on it, really pretty strong, relatively speaking.
Right. Well, distributors can be a point of frustration for many brands.
Oh, sure. Especially,
yeah,
you really got to level set expectation. Like a lot of people that want to talk to me about brands and all that kind of stuff, I'll offer, like, if you want to sell for me or you want to merchandise, whatever, work for us for a little while.
Right.
I really understand.
You want to know what it's like?
Well, yeah. You really got to understand, like, because it will become evident to that entrepreneur where their position in the world is after doing some of the work.
Right.
How's this product really going to live in this class of trade or in this vertical? How do we get there? How does food service work?
Right.
You could have the want. You're a coffee product. Everybody.
Do you know who you need to talk to? Who has the authority to say yes? Who has the authority to say no?
Yeah.
And in different chains, different stores, it's different.
Yeah.
Right? And you got to understand that landscape.
Yeah.
Let's take a really short break now and we'll be right back. The Barcode podcast is produced by Barcode Media, where our purpose is to equip emerging consumer brands. Go to barcodestartup.com to learn more about what we do. While you're there, you can also read full transcripts of podcast episodes, as well as get additional tools to help you grow your consumer packaged goods business. Now back to the episode. So fast forwarding a little bit, you ultimately decide to start Dynamo.
Yeah.
Right.
Now called Dynamo. Was Austin Specialty.
Okay. Austin Specialty Foods or Austin.
Yeah, I think we called it Foods.
Or something. Yeah. Okay. So, so it's now Dynamo Distributing. Is that right? So, and what was the thesis behind that? You hinted at it a little bit before.
So, ultimately, we recognize the landscape of what is a DSD, right? Which is a distribution company that really helps brands grow.
Right.
About starting 20 years ago, there was a roll-up of a lot of these little guys. And now when you look at who's out there, the chip people are doing it. So like Frito-Lay's doing it.
There are actually very few.
Right. Snyder Lance is doing it. The bread guys are doing it. Mission Tortilla, Goya, but they're manufacturer owned.
Right.
And then you have Coke, Pepsi, Keurig Dr. Pepper.
Mondelez does it.
With their candies.
Yeah, right.
And then you have a Bud House and a Miller Coors House, typically in every market.
Correct. And these are the trucks or vans or whatever they are that are visiting stores at least once a day, maybe multiple times a day. They're actually they have a route that they're in accounts and this sort of thing. And most of the early stage brands are not going that route because they can't get on those trucks.
That's right.
Right.
That's right. And really those brands. So if you're a Bud or you're a Miller Coors or you're Coke or you're Pepsi, that's the power of your brand by keeping all these little brands away.
Right.
Right. Because that's making them work too hard for their business. They don't want the competition. Right. We look at like the White Claw, what looks to be a phenomenon, right? That product's been around for 3 years and just really hit this year because
summer.
That millennial consumer aged into it. It checked all the boxes of the different diets.
Along with the Truly and
that's right.
Some other ones.
That's right. But in this market in particular, like White Claw is killing it. Well, the guys that run the suppliers for these other distributors, like Miller Coors, wish that never happened
Sure.
because it's killing them.
They'd
right?
rather just
That's
sell Miller Lite all day long.
That's right. And continue to do so for the next 50 years. Don't change it. Let's
Right.
just keep them on that, the Bud Light, that whole thing.
That's
So
right.
all these new brands, in order for them to grow, need, a strategic DSD partner.
Right.
And what we recognized was these guys with these legacy businesses, okay, they don't want new brands. They'll take you because they're going to have a fear of missing out, right?
Right.
So they'll take you if you really are able to build that fear into them. But
which often may come with some sort of either minority or majority investment from that big mothership too, right? So again, they're trying to get aligned. They're like, hey, if we help grow you, we want to participate in the upside and or have the ability to own you completely.
Oh, for sure. Yeah, that's for sure.
Right.
And then, but the entrepreneurial spirit of all those distributors that we just talked about, like the big DSDs, the spirit is gone.
Right.
And on the beer side, it would be the grandparents that built a business, right? And it's down to third or fourth generation at this point. And they became very, very good at logistics, right? And staffing and running freight efficiently, right? Really excellent because the scale of their businesses demand that, but less excellent at building brands. So they're not as big of a help necessarily to these. It's in terms of guidance, right? Because your real good distributor partner needs to get a layer deeper,
right,
or 10 layers deeper than just here's my purchase order.
Right.
This is the pricing I need. Send it.
They actually need to be of help in getting the right placement on the right shelf in that retailer and executing
that
promotions.
Like letting your supplier partner know, like, hey man, this isn't going to work in this market.
Right.
This is your pricing strategy. Well, you guys bake that in a room someplace that's not real.
Right.
We're not doing it. You're not going to get the pulls there.
Mm-hmm.
Where a lot of the big distributors are going to just take your product and think that you've already figured out how to make this thing work.
Right.
And that's why you see some pricing that's like out of control.
Right.
And that's just on one side of it. I think there's regional direction and all kinds of things.
Well, and the reality, obviously, on the beer side, spirits and liquor, it's its own world,
Mm-hmm.
and that is, frankly, there can be some cartelish behavior that happens there. That it's like, all right, like you want to actually be in the bars, and you came from this world too.
Mm-hmm.
That there are a lot of obstacles to your cute little startup brand getting on the right truck and in the right doors.
Right. And so you look at the spirits business, and this is a whole big conversation, but I would be very scared. While we have some really big brands that have come out of Austin, come out of Texas, that's a very expensive endeavor when you pull back the curtain on that thing.
It is.
And the retail landscape isn't great. It's controlled by very few. It's hard, and it's a hard path to market.
Mm-hmm.
So we get a lot of calls for that. And I'm like, you need to focus in states that, go to California,
Mm-hmm.
not New York, not Texas, try Nevada, but that's really mobbed up.
Right.
Florida might be okay. Louisiana.
Right.
Yeah, but that business scares me a little bit. We have a want to be in it at some point.
Of course. Yeah. It's a big business.
Yeah.
No question about it, but it can be challenging. And, and then there's part of it that especially the DSD reputation is one of, sometimes the relationships are very expensive for brands. Certainly, some clauses to those contracts can be very, very aggressive, and then it becomes a situation where you do it kind of to your FOMO example. You do it because you feel like you have to. Because the reality is some DSDs are so aggressive that they'll effectively elbow you out of a market. they'll move product around that is not theirs so that they get better placement. And that's just a very aggressive world that kind of blows the mind, I think, sometimes of earlier stage entrepreneurs when they thought, oh, I thought you just had a planogram and you put it where the picture is.
Well, you want your DSD doing that.
Yeah. Right? I mean, you want them to help you, to defend you.
Yeah, it's a knife fight in the street out there.
That's right.
And if you're good,
right,
you're doing that.
That's right.
I train my guys to
That's
do
right.
that.
Yeah.
Because if they're not on my trucks, they're the enemy.
That's right. Yeah.
Right. There are no friendlies.
That's right. Yeah. So you've got to stake out your territory, and that again. But this is a thing that people, they go to stores, they don't think about this stuff. How did this get here? Why is this at eye level, and why is the other thing not at eye level? Mm-hmm. Right. I think that's a little bit of a kind of behind the curtain Wizard of Oz stuff, that it's like, hey man, this is really what happens. Right. But if you don't do this well, you're going to be at a disadvantage.
Yeah, or you'll be disadvantaging your way out the door.
That's right.
All the way.
Yeah, you're just gone. Right.
And so really understanding, again, to the, my offer to, like, we'll pay you to work, but I think you need to
understand this.
Right?
Yeah.
It's kind of the Mr. Miyagi paint the fence.
Yeah,
deal.
Yeah.
You don't know why you're doing it this way, but believe me, you're gonna need it.
It'll be worth it.
Yeah.
Yeah. You're gonna create the muscle memory.
Right.
Yeah. So you started this distribution company, and like, what was your vision? Like, what did you guys start as? What were you focusing on actually?
So we were
delivering.
It took us a while. That was a government shutdown or something. So
there's always
our beer license, it's like the can collusion thing. That happens to me. If it can happen, it's happening to me. I got to remind myself for the next one.
Be prepared.
Right. So it took us a long time to get licensed. We had an idea of we ended up branding this thing called the Texas Takery. So it was a turnkey. Going back then, I'm going to say it, but I hate this, the razor blade thing. So we were going to distribute.
Right. And that's the inkjet ink toner kind of model, where you sell a thing for a lower price point, but then you actually make your margin and your money in the kind of recharge.
The repeat purchase. And that was what was going to drive. So this was a bakery program. Mm-hmm. So we sourced some really good, there's great bakery technology these days, mm-hmm. Frozen stuff that'll bake great. Mm-hmm. And we provided, this was for convenience stores. So we provided a really cool display case, an oven, a table to put it on, the bags, the paper, freezer, and then fill this freezer with a recommended program to grow their breakfast kind of business with muffins and croissant and whatever, and then complement their coffee program, because
sort of what some of them do with like the pizza programs or whatever.
That's
yeah.
Right. Uh-huh. And then we had an afternoon program, so cookies and brownies and stuff like that. The challenge we ran into, so the idea was great, the margin was there for retailers. We went with a bunch of independent retailers. I did do some chain stuff, which they executed well. The challenge was the reclamation, and the reclamation is essentially spoilage.
Right.
And they weren't willing to throw it away. And I'm like, dude,
the quality is...
Yeah, you got to put a clock on this.
That's right.
And you got to clean it, by the way.
Right.
Right. It can't, I'm going to give it to you.
Independent convenience stores are not known for their ability to do that well.
That's right. So, lost lots of money doing that. Mm-hmm. It was a really good idea. And there's examples of that, in that class of trade, but just really found out that class of trade, that customer, not enough there to make a business.
Right.
And some would execute well, but that's not enough to make a real business.
Very uneven.
Right. And then we started doing some foods, but traditional food with snacks, a lot of the products, it was challenging for us to get territory exclusive rights. Right. Because they're just like, hey, we're going
They'll take anything.
Yeah, we're gonna push it through all these broadliners,
Mm-hmm.
and then we're also gonna go direct, and then you're lucky if we sell it to you. So that was backwards.
Right.
And had been working. Then we got licensed for beer, and then we worked
Mm-hmm.
for a number of breweries. As we
Kind of the craft brewery.
craft, and
Which was a great on-ramp for many of those folks too, right? Who maybe they couldn't get on or weren't willing to get on with some of these larger distributors.
well, that's right. So they were scared of some of the big guys.
Mm-hmm.
Some of them were in the craft space. There's a lot of disdain for distributors. It's just looked at as the evil empire,
Mm-hmm.
which is really not. You know, we're kind of a rarity. There's
Right.
not a lot of guys that are doing small stuff.
Right.
And then when we're able to really help, you know, our breweries, and they're able to take some of the feedback, we've been able to grow some breweries that we're really proud to be working with.
Yeah.
And then up into we did not much NA until we started Big Swig.
NA being non-alcoholic.
Yeah, non-alcoholic beverages.
Right.
So we've had Dynamo for a little bit north of 6 years. Launched Big Swig about 2 years ago.
Okay. So let's pause there a second. What was the genesis behind Big Swig?
So I had always had to want to get back on the manufacturing and the brand side.
Right.
So as did my operating partner, Ben. So there's three of us that are founders. So Ben Irwin is my partner in Dynamo and Big Swig, and then myself, and then branding guy, our third founding partner. His name's Christian Helms. He's
Of Helms Workshop.
Helms Workshop, like the best.
Right. Super talented
totally
designer.
The best. And we met. So I launched 2 years ago. We may have met as long as like 4 years ago, and I had approached Christian and said, "Hey, we really admire what you do. This is our idea. Here's our distribution business. We want to get into the brand game. We have the unfair advantage of being in grocery stores, and we're able to look at category trends and volumes, and if it's not actual data, which we're able to see often, we're just in and
You have a lot of
experiencing it.
anecdotal evidence.
Yeah, I mean,
too.
it's when you're in it every single day,
Right.
and that means all 7 days.
Right. So you knew that LaCroix was a deal.
That's right. So the sparkling water category was the fastest growing category in the grocery store.
Right.
And that was private label. That's all of them, right? So we had been working on what became Big Swig for, again, 2 years prior to launch. And that was driven by, okay, we see carbonated soft drinks are waning. We look at the current dietary trends. We look at the overall volume. Because my past experience, I was able to get some manufacturers to take me seriously where they would normally not talk
Right.
to startups. So we were able to get the product done at a price that was, the margins aren't great, really.
But it was
And
acceptable.
the pennies, yeah. I mean, it makes it work. And we were able to say, like, okay, what can we do? How can we participate in this category?
Well, you also have the advantage of owning the distributor,
Well, that's-
right?
yeah.
Which allows you to
We're
play ball.
That's right. We know we're going to be able to get on shelves
Right.
at the right price. We are also able to, as the distributor, and what makes kind of us unique, we really believe strongly in high-low price strategies, and almost like game theory with pricing. And when you're able to be the, discount the product at the back door, kind of yourself, what I do with all my brands,
Right.
we're able to not make the retailer sensitive to outside competition, be willing to compress margin and yellow tag and really invest with them. And
So tell me more about that. So your the game theoretic part of it. So high low for you at the shelf level means what?
so for the brand, we're a $4.99 to $3.99.
Right.
And ultimately what you're trying to do with a product that doesn't require refrigeration is display.
Right.
Because consumer confidence is built by display.
Pile it high and let it fly.
Right. And a lot of the, I've been told by a ton of people that they thought Big Swig was a private label right? HEB product, because they see
It's
it
such a strong presence
so
there.
so prominently displayed, which is a great thing. That means we're doing a good job.
Right.
But your price is gonna, so you need to get trial for your product. Consumer confidence and kind of ultimate trust is going to be driven out of your display program, being able to protect the retailer's margins and give them velocity on this, on a price promotion.
Right. And so in terms of protecting their margins is making sure that you're contributing as the brand and or distributor in this case, to help them make sure that they're still making their money.
That's
on
right.
this.
You need,
Even when that price comes down.
Yeah. So we just eat it.
Yeah.
But you put that into your brand building.
Yeah.
Instead of
That's
marketing.
part of the model.
Right. If you're going to demo everywhere, that's very expensive.
Right.
You know, it's $200+ to demo. How many units are you going to sell?
Mm-hmm.
If you took $1 off every unit, right? How much more would you sell in all 7 days,
Right.
24 hours of every day?
And you're kind of driving that trial in a passive way rather than the active demo way.
That's right.
Right.
And some items need, you know, this
Some
particular,
items you just can't do it.
right.
Yeah.
And this particular category, just a lot of velocity there.
Right.
Our brand position was big and bold and different than anybody else in the category.
Mm-hmm.
I think that was a pretty big bet, but we feel real confident about
Mm-hmm.
Christian. It was a funny story there. When we're the ideation process, we all kind of get together and it's like we're partners and there's all these ideas. And I think Christian gives back to Ben and I, you know, a bunch of choices. And then we're all like, well, I don't know. I've won awards. I think I'm pretty special. And
I'm pretty artsy.
Yeah, I gotta
Yeah.
whatever. And I think Ben was like, didn't we partner with that guy? Cause he's like the best in the world at this. I'm like, yeah. And I was like, buddy, you baked the cake and we're okay with it. He's like, you're kidding. I'm like,
Which as an artist and designer, I'm sure he loved.
right.
Right.
So we're yes before we see it. We're just doing it.
That's good.
Do the best you can.
Yeah.
So that was
That's pretty cool. Yeah.
that was the direction. We worked together on flavors,
Of course.
just ideas, but when it comes to the look and the feel and
That's his baby.
I'm working hard doing other stuff, right?
That's right.
And it's so hard to take your ego out of it,
It's true.
right? You just got to remember, like,
Right.
yeah,
Because you're wearing the logo around with you everywhere.
You're right.
Like
Yeah.
This is part of my identity
Yeah.
too. So so now you guys with both Dynamo and Big Swig, you're doing a different thing because they're obviously partially because of LaCroix's success and some of the private label sparkling waters that you're referring to, Topo Chico, others. There's a lot of competitors in the market that weren't there 3 or 4 years ago, right? So it's again now a lot of play. Certainly, you have some of the we mentioned the White Claws and others, the kind of alcoholic options down some of those paths as well. But what differentiates? Like, what's your approach with Big Swig that creates that difference for like both at the shelf and then in your larger strategy? I know you guys are really laser focused on Texas, right?
right. So, you know, Texans love Texas. That's why we're
They
here,
do, yeah.
right? You're not here because you hate it.
That's right.
Leave if you don't like it, right?
Yeah.
So really being water made in Texas for Texans is first. Speaking very boldly to a category that was very soft and feminine.
Mm-hmm.
I think, you know, the brand has edges to it and others, you know, may not. We keep our flavors all inspired by Texas. So the chili mango, the jalapeno pineapple, we got the pickle, prickly pear, watermelon mint, stuff that's very familiar to,
Right.
you know, our experience.
It's in the Texan culinary palate.
Right. Yeah. Thank you. And then in terms of, you know, differentiator, you know, there's a high price, there's a low price. I think.
Are you trying to do that within your brand, or you're trying to anchor it in the broader set?
Yeah, within the sparkling water category, so that when we look at the consumer, and this is where I was going with that, there's the consumption in this particular category is so high on a per point. You may drink 6 or 8 cans a day.
Right.
That then becomes kind of a lifestyle extension.
Correct.
Right. So
Yeah.
White Claw's
I'm
growing
guilty as charged.
right.
Yeah.
And White Claw's grown crazy, but like guys don't feel great about it. It's not that cool.
Yeah.
Really. I mean, I'm going to drink it.
It's like drinking a Zima.
Yeah. And and if everybody's doing it, then like, oh, hey, but really,
Right.
we're not cool doing that.
That's right.
So can our brand speak to people in terms of lifestyle? It looks like it's working there.
Yeah.
And I feel like it's almost created a moment. There's a lot of social engagement with the brand, but when you say to somebody, "Hey man, let's go have a big swig," it's like you're doing something.
That's right.
You're having a big swig.
Well, it's also something that can play in the convenience world a little bit better, maybe than some of the more feminized brands that you're referring to there.
Yeah, that's right. Because
which tends to skew a little bit more masculine.
That's right. Well, a lot. I mean,
A lot.
honestly,
Monster and all the
That's right.
all the
all the
different
energy
energies.
and the guy buying a can of Skull.
Right.
They're
right.
not having Perrier with their Skull.
They're not. Sometimes you'll have one facing a Perrier. Sometimes.
Right, but if they're in the category,
Yeah.
we're hoping that the Big Swig checks their box.
That's right.
We're at the Texas State Fair right now. We're actually selling kind of great guns up there.
Oh, that's great.
It's pretty cool.
Washing down the deep fried
Something.
butter stick or something like that. Yeah.
They were in the Go Texan store. But it's up
Excellent.
to like 300 cans a day.
That's awesome.
It's pretty cool.
That's awesome.
So that kind of speaks to the consumer. So if carbonated soft drinks are shrinking, the last people out of that game are the people that were kind of diehard for brand and nostalgia and whatever Coke means to them,
Right,
or
right.
RC Cola, or you name it. And does Big Swig kind of replace that? Anecdotally, I run into every time I see the fire department shopping in a store, I'll pull out a VIP coupon and they're like, "Oh, hey man, we buy it all the time."
Yeah.
He's like, "We call them work beers." So I was like, I'm stealing that.
That's excellent.
Because it's mostly,
Yeah.
guys, some gals, but you're hanging out and all you're doing is waiting for a fire.
That's right. Very community camaraderie oriented.
And if they could, they'd be drinking beer.
Sure.
That's kind of
But they
what
got to
you're
be
doing.
on.
They're cooking.
They got to be at the ready.
Right.
Yeah.
So then the swig becomes work beers for them.
Oh, that's good stuff. So you really saw that as like you analyzed the sparkling water set and said, "Hey, we actually think that there's an angle here for like that there's a male consumer who's underrepresented
That's
here." Right.
Yeah. So that was the
which is a
white
little
space.
a little counterintuitive because most of the time, especially when you're talking about groceries, there's a lot more opportunity because the typical grocery shopper is a female, and it's just kind of empirically how it tends to go.
That's true.
So you had a little bit of a counterfactual there.
That's right. And it presented itself in white space though, right?
Okay.
Like
Nobody was going after it.
Noise, and this is how it's presented, and this is what people think the category should look like.
Okay. Yeah.
But then I think we kind of, a little tiger by the tail in terms of timing of the millennial consumer wants something different. And that consumer is really, really important.
Right.
Now they're aging into it. And then the other brands that we're up against, they're just not cool.
Right.
I mean, that's it.
Yeah, absolutely. So what have you learned about winning at that store level, at the shelf level? Like what's the approach that actually generates success?
For us, a lot of touch, really understanding the price, the needs of the retailer in terms of price.
And a lot of touch means you're visiting that store not once a month.
No, we have stores that we are in, this is not every store, but I have a representative in between salesmen, merchandisers, drivers, 14 times a week.
Right. Right. So you're hitting those, somebody's there
Yeah.
a couple times a day.
Right. Twice a day.
Right. Yeah. And you're building relationships at the store level. You're building relationships with the store manager, the assistant managers, the department managers, the stockers,
That's right.
everybody.
That's right.
Right.
And then when they're going to do something, there's a lot of trust there.
Yeah.
So if something needs to get done, and you say you're going to do it, then they have the confidence that you're not going to leave them high and dry.
That's right.
Because labor becomes a big
because they're gonna see you again tomorrow or this afternoon.
right, and
Right.
they got your cell number, and you're
That's
gonna
right.
make it happen. So that's great. Relationships are great. We're able to offer on the distribution side, there's a concept called contribution margin.
Right.
So then that's thinking about something that runs DSD as grossing up the margin or grossing down the competition.
Interesting.
And it's about 7 or 8 points.
Okay.
If a product doesn't have to go, into their warehouse, then picked and on their truck, then to their store and then worked by that store,
Right.
the labor of that store, that grocery department or whatever department it is. So when you're able to kind of get that across as you build these relationships with people and just kind of remind them like, hey, let's not just look at the symbol. Let's think about contribution margin. That's a real benefit.
So you're actually coaching the store personnel on some of that stuff as well.
Yeah, maybe just kind of reminding.
Yeah.
Because that stuff can get lost and you want to share it. So things aren't apples to apples.
Correct. Correct.
You got to use that to your advantage to get the space.
That's right.
And to think about white space in that store. Like typically we don't normally do this, but I'm going to ask for it. And can we have this space? And
Right. Can we do the secondary display over here?
That's right. Can we do 5 displays in
Right.
all the different parts of the store?
That's right.
And you
It'll be beautiful. Everybody will be talking about it. It'll move a lot of product, all of those things.
your margins are there. This
Yeah.
is what your real contribution margin is.
Right.
That was it. We're doing that now. So this summer we launched the 16-ounce cans, which was a little different. I mean, there had been 20-ounce PET,
Okay.
single serve
Right.
sparklings out there. There's a lot more penny profit in it
Right.
for the retailer.
Right.
We did some.
These are kind of like a tall boy-ish.
It's a tall boy,
Yeah.
exactly, a tall boy. We did some unique flavors that are only available in that. And we're able to move that around the store in terms of, if we're in the deli section, if you're going to buy a salad or a sandwich, well, how about a 0-calorie sparkling water?
Right.
So an add-on with high margin. My team's really good about getting all kinds of displays of that stuff.
Absolutely. So what's your vision or goal for Dynamo and or Big Swig?
So we, for Big Swig, right now plan to stay in Texas, keep it in Texas, expand retail.
Right.
We have a bunch of C-stores coming on this year, possibly some of the other retailers in the state.
And that's part of the identity, right? Do you want this to be the go-to Texas sparkling water?
And ultimately, if you're drinking a sparkling water and it's not a Big Swig, your buddy's going to be like, hey, man.
We need to have a talk.
Yeah, what are you doing? What is that? It's just not cool.
Right. Sort of the Shiner beer strategy in some ways.
I mean,
yeah.
And when you're a brand, and I encourage really all Texas brands to remind themselves of this, is people already love Texas, right? So if you're here, talk about Texas,
right?
And it's a very prideful state. So hooking yourself to that is great. People feel good about it.
Absolutely.
Right? It's Texas.
As long as your target market is Texas. Now you go Texas, outside of Texas, and sometimes that has a very different reaction.
Yeah, they don't get. Well, I mean,
yeah.
Austin specifically, but Texas exports really well. There's a lot of expats
for certain things.
Yeah.
Right.
Yeah.
But if you emblazon the Lone Star flag on it, people in California might not, maybe for some things.
Yeah, it depends.
But not on everything. Yeah. Like, there go the Texans again.
Right.
Yeah.
Right.
Right.
That's an interesting. So kind of back to Dynamo.
Yeah.
The goal is to really grow this into kind of the premier white glove DSD, company that's looked at nationwide, right? That everybody wants to be, and build a lot of some giant successful brands.
That's a great goal.
So that's what we're trying to do. And I talk to brands constantly, our suppliers, people want to be. Now the inbound is crazy.
I bet.
A little
too crazy.
It's not the fact that this phone has wrong.
That's right.
9 times while we've been here is a little odd, maybe just Friday. But lots of brands coming in, and you look at there aren't a lot of people with great go-to-market strategies. And then there's not a lot of people that do what we do for work that are offering good go-to-market strategies. So, and I don't care how experienced these people are too.
Right.
Big guys. And you ask them that and it's like dead air, like, what do you mean go-to-market strategy? So understanding, I ended up doing a lot of education on how important our big retailers are that are here.
Right.
You look at ACV numbers.
ACV is all commodities volume. It's a measure of that not all doors are the same. A little mom and pop grocery store does not sell the same as the HEB at Mueller, for instance.
Yeah,
right?
And I explain it like this, like in a particular market, say it's like City X, and you talk about one particular store banner, their percentage of ACV assigned to that banner, I don't mean a particular store, but like an HEB, so like all the HEBs, would represent the percentage of hot dogs and toilet paper and charcoal and ketchup that they sell.
That is sold anywhere.
That's sold anywhere, right? So of all the hot dogs in that market, they're going to sell that percentage of it.
Right.
So because our big HEB is such a significant ACV, your strategy needs to be
weighted in that direction.
There needs to be a plan, and because you're not building a brand in Texas without them.
Right.
It's just not gonna work.
It's sort of like if you're going after the convenience store market in Texas and you ignored Buc-ee's. You're like, okay.
That's right.
They sell a lot of stuff.
Right. And they're really influential to the other.
That's right. Other people
folks.
are paying attention to what they're selling.
That's right. So when HEB even more so.
Right. Oh, absolutely.
Like you really believe that you can't do anything without them.
Well, in the case of HEB, it's other chains around the country are looking at what they're doing.
Oh yeah.
Right.
I mean, they're sacred shopper to death. I mean, everybody's looking at them.
Sure.
Which is really great. So if somebody does make an investment into the Texas market, they need to understand how to really win there. And that throws a lot of people's play because you don't have a lot of other markets that have that dominant of a retailer.
That's right.
And it could throw your price strategy around and off.
Right. Sometimes there are these key regional retailers, kind of a Publix or a Wegmans or whatever, where there is a very clear market leader in a given region.
Right.
But in the markets where HEB plays in Texas, it dominates.
Yeah. It's crazy.
Yeah.
I was actually talking to, it's a big company backed venture fund that had called and we were rapping, and he, was like, hey, I pulled your numbers, your Big Swig numbers, man, they're awesome. And I said, well, how did you get those? There's no way you have that. I said, my biggest customer doesn't report.
That's right. HEB doesn't share their data.
And he's like, oh no, well, I got you, you're number one of all the other sparkling waters. And I was like, well, what does it say my velocity is? And he's like, 16 cases a week. I'm like, oh, hey, dude, I don't want to brag, but do you want to know what my velocity is? Right? And it's way north of 10 times that.
That's right. That's right.
Right? Like way.
Yeah.
And he's like, oh, gosh. I'm like, well, where are you getting this?
You're just making stuff up.
I said, stop buying with that. If you're making decisions off of that, you can't do that. So
that's right.
And that was the first time I had heard that.
Yeah.
I'd always assumed that people just weren't getting anything in terms of data.
Well, it clearly wasn't getting good data.
Right.
Well, they don't share data. That's sort of the thing.
Yeah.
So they know how you're doing,
right?
And nobody else does.
Nobody else,
and they see that as a competitive advantage.
Yeah.
Other chains, that's a profit center for them, right? They're selling that data and making money off of it. So HEB's like, nah, we're good. We'll just kind of keep that.
Oh, I love working with those guys for all kinds of reasons.
Well, they're very, very good at what they do.
Yeah.
Very good at what they do. So what's next for you? What's on the horizon?
So we're looking. We're going deep into CBD.
Okay.
So we happen to have a refrigerated warehousing, and we run refrigerated trucks, and we did that for craft beer a long time ago.
Right.
That puts us in a really unique spot in the distribution side because the beer guys don't do it. The dairy guys are refrigerated, but they're really not into a brand building
Not at all.
space. So that's unique
Right.
for us. We've had some bigger suppliers come to us to open up particular markets. So that's good. We've grown. Dynamo has grown from less than 20 employees to north of 60 in about the past 8 months.
That's really significant.
And it's still growing.
Yeah.
We need people. We need good people. And then that CBD space,
Which I hear is a thing.
right. But it's a
Yeah.
thing. So the money loves it.
Sure.
The press loves it.
That's right.
The consumer,
It's still figuring it out.
way new. And then the retailer, some like it, some don't, some can't.
Right.
They're not sure.
Is this okay?
That's right.
Yeah.
So does it work?
Mm-hmm. Right.
Some work.
Empirically,
some
does
don't.
it work?
I mean,
Yeah.
I don't even know.
Right.
So, and then some people, I just learned this, like some people it works, but the same thing, if you don't have the right receptor or whatever potions in the thing isn't
You're immune.
for you,
Yeah.
then it can't work. I did say, I want to put out the 23andMe test for CBD, right?
Sure.
You spit in a vial, mail it in, and say like this is the one for me.
That's right. Next business.
So that was whatever that was. But there's
Yeah.
enough businesses out there.
That's right.
But what we're trying to do with that is we're taking a lot of, well, not a lot of brands, but say I'm taking a half a dozen brands of the best funded national brands and working with them to really be a category captain of that category. Because it's an opportunity for me to get these new guys
Absolutely.
that are really well funded and then present a turnkey solution to a retailer that we can wholly manage, that we have a lot of confidence. They have a lot of confidence in us.
So you're presenting kind of a cohesive CBD set to them.
That's right. That's right. And then with suppliers that understand the game and they can afford it.
Are they all beverages, or are you playing across categories?
They're all beverages now.
Yeah.
Oh, some have some snack. We haven't
Right.
taken those on yet.
Right.
But it's a little bit of a slow build. I mean, some
Right.
of the velocities are really high. We're pretty much playing in independents and C-stores.
Mm-hmm.
Not a lot of independents,
Mm-hmm.
so mostly C-store. Price point is, I don't know how long it'll hold. You remember
Right.
cold pressed juices,
Sure.
$10 a juice. And you're like, when are the wheels falling off that thing?
And it did eventually.
Yeah, it did. Because
That's right.
I just can't do $10.
Not
a day.
every day.
That
Yeah.
habits.
That's right.
I'm saving that for beer.
That's
my
right.
beer money,
That's exactly
not my
right.
juice money.
That's right.
right.
Yeah. Well, and the consensus is that what's happening with CBD right now, and kind of the larger cannabis debate is there. And I think it's fair. Is this is sort of a post-prohibition era, like the next Anheuser-Busch or whatever is going to come out of this era. And so that's thus the land grab around CBD, is whether it's an existing giant player or some upstart, some small set or one or two people are going to win this. And it in the end is going to be a pretty big market.
Right. But it needs to be fostered properly.
Correct.
Because it can really.
Because there's no quality standards, a lot of that stuff
That's
is
right. And how we're so we think our plan. We have cooler programs. We have branded cooler programs that can really help these suppliers collectively grow. The
Right.
tide will rise.
And it's an interesting marketing problem too, right? Because you have the do we do like the Cypress Hill looking, kind of lean into the marijuana associated thing, right? In most cases for retailers, they're like, not at all. That's not what we want to do.
Yeah. Ours are very clean.
Yeah.
Nationally kind of known
Right.
brands. Because there's already the Bone Thugs and Harmony or whatever, right?
That's right.
There's a lot of that out there, and it's like scary.
That's
and it's garbage.
Yeah, and it's made in somebody's basement.
Totally. There's stickers.
Right.
I mean, it's bad.
Right.
Put on crooked, So that's I'm definitely excited about that. And then other functional beverages. We talked to a prebiotic brand. This was great. A guy I worked with back at Golden Brands 24 years ago happens to be the national sales manager for this prebiotic brand called Olipop, which is doing really, really good. And we met on the phone, and Austin's going to be important to him. So he flies out. I turn the corner into, our greeting room. I'm like, oh, Jeff, dude. He's like, Sean. Oh, wow. And we had to hug it out for a minute. I hadn't seen the guy in years, and I didn't know it was him.
Yeah.
Right? So that was really good. Continuing to grow the brands, be nimble, possible collaboration for the Swig.
Cool.
On some boozy.
Cool.
The market really wants it. I don't know that that's something that we can really do, but I could do a collaboration once. So
based on anecdotal evidence from ACL Weekend 1, I think it's a pretty safe bet.
Yeah.
At this point.
I got a bunch of new flavors in the hopper for the Swig, but a hard Swig is very interesting.
Sure.
For us, and big customers have been asking. They're like, "This is kind of a no-brainer."
Correct.
I don't know what to do. I also have some other functional ideas for Big Swig that'll keep us alone on what we're doing.
Yeah, that's awesome.
And every move we make is it's sparkling water, and it's for everybody, but it's going to continue to keep us as a total separate. I don't want to
a step ahead, a step different, all of that.
Yeah,
stuff.
or at least to the side, right?
That's right. Yeah.
So
you're not playing the same game as everyone else.
Right.
That's good stuff. Well, Sean O'Connor, you are a fascinating guy. So I appreciate you taking the time out of your busy schedule.
Thank you very much.
And not taking those 9 phone calls from people who want your help for a little while.
Yeah, from the next brand.
Yeah. So I enjoy talking to you, and I know that our listeners are going to get a lot out of your experience and wisdom that you've picked up. Some of it very, very hard won, and there's no way around that.
Well, there's no shortage of the losses.
But a lot of great opportunity ahead. So again, thank you for joining us.
Thank you. Right on.
For links to the people and companies we mentioned during our conversation today, be sure to visit barcodestartup.com/podcast for the show notes and a complete transcript of this conversation. And if you have a moment, please share, rate, and review the Barcode Podcast wherever you listen to podcasts so more like-minded listeners can discover these conversations. Thank you so much for listening to the Barcode Podcast, and we'll see you back here next week with a new conversation curated to help equip emerging consumer brands.